Hi everyone, welcome to the Majlis. I'm your host Yasmin Khwaitar, and with me today I have Ali Shihabi. Thank you so much for being here today.
Pleasure.
Ali is the founder and former chairman of Rasmala Bank. He's also the former chairman of the board management committee of Saudi Hollandi Bank, and he founded the Arabia Foundation, which was a think tank on the Arabian Peninsula, the politics, the economics, and particularly focusing on Saudi Arabia. So great to have you here today.
Great to be here.
Would love to talk with you about your career and especially your start in banking. So can you give us a bit of a rundown of the evolution from your start with the Saudi Hollandi Bank?
Well, I was working first in Sama and the central bank, and then I got involved with a group called the Mawarid Group, which mounted a hostile takeover, the first hostile takeover of a bank in Saudi Arabia, really.
And this was what year?
This was 1990. And I led that group, and we took over the control of the board. Mm-hmm. And we ended up restructuring the bank in a very New York fashion, where we fired 50% of the staff and management, which was something that the kingdom was not used to, really. And it caused, luckily, there was no social media in those days. Otherwise, it would have caused a riot. But it was too aggressive the way we did it, actually. Mm-hmm. But it paid off in a few years' time. And then the bank really was put for the next 10 years on a very solid footing. Okay. So that was a very interesting exercise, shall I say, in restructuring a bank in the kingdom, in a market and environment that was not used to that sort of behavior and actions by shareholders.
And what was the reason for this aggressiveness?
It had been underperforming very badly, really, and it was managed by our Dutch partners at those times, not in a very dynamic fashion. It was managed by ABN AMRO, which in those days was a very sleepy bank. Mm-hmm. So we benchmarked it to Saudi American Bank, to Citibank in those days, which was far ahead in the kingdom. And our objective was to bring it up to those standards. And I think we did a very good job. Profits started to grow by 30% a year for the next, 5-6 years. So that went well. Then I went and established in the late 90s a sort of private equity firm focused on the region. Mm-hmm. I established it first in Dubai, then we got an office in Riyadh.
Which at the time was quite rare also.
Yes, it was very early. Mm-hmm. And we acquired an asset management company in Egypt and a brokerage company in Oman. And it was very interesting and exciting. Those were early days, though. The market took time to develop. We were one of the first people to get a CMA license in Riyadh. Mm-hmm. And I think one of the issues, one of the problems with opening up at that time in the kingdom, and I think a problem still that firms licensed financial services, independent financial services firms licensed by the CMA, mm-hmm. is that the banks really, although they separated investment banking from commercial banking, they allowed the banks to retain these subsidiaries or affiliates. And the banks came into the market with a huge advantage. Their client base, their balance sheet, their capacity to offer credit, which other firms couldn't offer independent financial services firms. Mm-hmm. And so it was a very difficult competitive game to play with, to set up an independent sort of full-service investment banking firm in Riyadh in those days. And I think it still is, by the way, because there are some that are doing well, but still they are competing against the bank affiliates. Mm-hmm. And so it's not really a level playing field. But for example, we found the asset management business in Egypt very profitable. Brokerage in other areas.
Two markets?
Sorry?
How would you compare the two markets? Why would you say Egypt was more successful?
I think Egypt was more successful because Egypt in those days, as part of its relationship with the World Bank and IMF, had to put in place early reforms in the 80s and 90s. Mm-hmm. And they built up a domestic asset management industry. And I think the Egyptians also were more encouraged local firms in a better way. Right. If you go, many of the best investment banks in the Arab region today still emanate from Egypt. Mm-hmm. And I think that they created a local asset management and investment banking industry that no other Arab country has succeeded in doing yet, even till today. So despite all of Egypt's problems, like firms like EFG Hermes and others that were very good in, and that went also regional after that.
Right.
So it was interesting to find that the investment banking space in Egypt was more developed, more profitable, and much deeper than it was in the kingdom.
And did the assets and asset classes also differ between the two or in the region at large? So what sort of assets were you looking at in Saudi, for example?
Well, again, private equity in the kingdom was very difficult early on. The kingdom suffered in those days from an abundance of capital, and a lot of family firms. I sometimes called it lazy capital because a lot of firms would own multiple businesses, have holding companies and be in multiple businesses, but they would not be under pressure to sell.
Right.
The difference in America, for example, is there's so much leverage in the system. So private equity firms go to look for opportunities where firms either want to deleverage or because so much of their leverage has put them at risk and they can't pay off their debt. So that creates an opportunity. In the kingdom, there wasn't enough of that. There were either these lots of subsidiaries that would have made great private equity targets, but the families didn't want to sell. And it was private family held money that was not held to a high performance standard. They were willing to let the company continue operating at a subpar basis. And also some of the government affiliates, and that was not just in the kingdom, but across the region. Many of the government affiliated companies were run by bureaucrats and boards, and performance was not, they were not under very heavy pressure to perform. So they could afford to ignore private equity opportunities. I think that what's happened now in the kingdom in the past 5 years is that there's much more of a pressure on performance. And that is very healthy because that forces firms to optimize their capital base, to become more efficient, to look for partners, and also private equity partners bring alliances, bring management, bring a lot of things that go beyond pure capital. So I think the environment in the last 5-6 years in the kingdom has gotten much more healthy, and as a result, you've seen much more activity also.
Right.
Venture capital has developed, which hardly existed before. And startups, you have Saudi unicorns now. So the market has come a long way, particularly in the last 5-6 years.
In parallel, you have the Saudi family holding groups we were talking about. Those are also, at the time were strong at the tail end of the first generation, starting the second generation, and now you're moving into, end of the second generation, start of the third generation. How do you see that sort of evolving as, they grow through the family and, there's this inevitable idea that they'll either split up or things will start to become more challenging to manage?
Well, I think the message they've all gotten, which is also the message that the government is sending to the public sector, is going public. The best solution is to take those companies or subsidiaries public. Bring in public shareholders. That solves family issues. That solves distribution issues. That leaves the people in the family who want to be involved in the business and can add value to still operate, and others just to take their money and run. So I think the IPO market and the way that has developed has also been a huge improvement.
Right.
Because
you also have a lot more IPOs in Saudi.
You have a lot more IPOs, and you have a mechanism now to take those family-owned businesses and prepare them to operate independently in a much more competitive and more demanding environment.
I think you can also see PIF trying to play a role here in terms of.
They're playing a very good role there. They are injecting some money into a number of companies, giving them scale, giving them heft, encouraging them to go public. They are listing some of the companies that they've had before also to go public. So and going public, it's not just a question of raising money or raising equity. It brings transparency which is so important to the sector.
Right.
Because that creates efficiencies that spill over into the whole economy.
And now you see as well foreign private equity firms like BlackRock, like Rothschild coming into the region, setting up offices in Riyadh. How do you think that will impact the market?
Yeah, I'll wait to see how that develops. I think, again, I would encourage more of a focus on regional firms, because I think regional firms have a more genuine appetite. You wonder sometimes if the global firms just come here for PR reasons, or really more to raise money than they do to invest money.
Right.
I think that a focus on the regional firms that come from the other countries in the region should be also more important, because I think they are more serious investors in private equity in the kingdom. Really.
And do you think there's a risk of competition in the region from sovereign wealth funds, because we see a lot of them getting more active, particularly in the last 5 years of sort of playing in this area in the GCC?
No, I mean, people do talk about crowding out in terms, but I think that what particularly the PIF has done in the kingdom has been to inject energy into the system, listing more companies, investing in other companies for them to grow. And I think that it also plays a role of sending signals to the market and direction to the market. And I think, yes, I think that, PIF and PIF companies have to be careful not to crowd out the private sector in borrowing from the banking system. And that's something they'll all have to watch. But other than that, their investments in private equity activity is very good, because it energizes the system. I mean, we're sitting in studios here now that have been set up by a PIF affiliated company. These didn't exist before,
right?
So there's so many things where private capital has been either shy or unimaginative, and where the PIF has come in and led the way. And their idea is to IPO everything or sell it off, and so that is a healthy. That adds value, I think, to the system.
And when we look at what you would call, a healthy, mature private equity market, like say the U.S., what do you think Saudi has to still overcome, or things that need growth and areas?
I think we need more leverage in the system in terms of in the private sector. Banks have always been very conservative in Saudi Arabia because the legal environment has not been conducive to easy collection of loans that are non-performing. That is getting better now. The legal system is being improved, and the capacity for banks to collect on their debt has increased dramatically. That encourages banks to lend more money. As more companies become leveraged, yes, they have to become more aggressive, but they also become more vulnerable, and that creates opportunities for private equity to come in.
Right.
So what you want to do is you want to get out of this hole of lazy capital, which is sort of old government and old family money sitting down, resting on its laurels, and not feeling the winds of competition, which is what they need to do to be efficient and productive and successful, really.
Very clear. And so this also ties into, I think, the larger landscape of the economic change that's happening in Saudi right now, which you write a lot about. So we'd love to hear your opinion on the economic transformation here, and what you think are the key sectors we're active in.
Well, I mean, there's an attempt, a strong attempt to diversify away from oil, but I think oil and gas will always be critical for the foreseeable future. Oil is not going anywhere, so the government continues to invest in oil and gas and build up those capabilities. But you have other sectors like mining, which are, again, you can look at the way the government is approaching Vision 2030 as sort of an approach to portfolio investment or venture capital investment, where you spread your risks over many sectors.
Right. It's more like VC than it is PE in a way.
More like VC than it's PE, although it depends on some sectors, because you already have some mature sectors like oil and gas. But you have the lower hanging fruits, which are things that seem much more tangible and easier to get at, like mining and like tourism.
Right.
Because tourism, you have a virgin Red Sea coast, which is untouched and a few hours away from major metropolitan areas in Europe particularly. And mining, you have a large reserves of key minerals. And then you've built certain infrastructure, for example, train track infrastructure, things for mining that are already in place. So I think you have your mature sector, which you continue to build, which is oil and gas. You have some of the lower hanging fruits, which are like mining and tourism, which you are pursuing very aggressively. And then you have some of the giga projects, which are on the more speculative side,
Right.
like Dia and like NEOM, and things like the EV sector, where you're building electronic or electrical vehicles.
It just seems like a lot of countries are in competition to, sort of put out the best model these days. in
Yes,
terms of
so you
electric
have
cars.
that. So I mean, you have a riskier, you have a range of sort of ultra conservative assets, which are your oil assets, to sort of riskier range, which is your EV assets, and everything in between. And as time goes on, the sectors that show the more promise will get more resources.
Right.
The sectors that show less promise or maybe turn out to be too risky will get less resources, and that's a healthy way to approach the whole process of diversification, really.
Right.
So you
And-
just don't make one bet or two bets.
And where do you see sort of it's already been almost 10 years since Vision 2030 was first announced, and we're coming up, there's 6 years to go. Where do you see the successes in the kingdom, and then where do you see that we still need not necessarily help, but where are the challenges?
No, look, I mean, people aren't aware as much of the successes. I think one of the mistakes that we make is there's a lot of focus on aspirational projects, and people aren't getting a feel of the tangible things that have been achieved so far. I mean, one of the most important achievements has been in the housing sector, where Saudis today, home ownership is at 65%. That's higher than America now. That went from something like 40 or even below 40% to above 65%. So there's been tremendous success.
And what were the
in
drivers of that?
government policy. Government just came in and built houses and supported the mortgage market, so that mortgages also have become, in my time in banking, mortgages just did not exist, really. So
Right.
mortgages have come in, governments have set up, and the PIF have turbocharged the sector with house building programs, and it's a massive achievement to have delivered that sort of housing stock
Yeah,
to people.
especially considering we have such a young population for so many of them to be homeowners.
Yes.
Yeah.
Then the reduction of subsidies, and yes, some people obviously have some industrial sectors are suffering because of that, but it's going to make them more efficient over the long term. They're going to suffer a bit over the short term, but the general reduction of subsidies is so important to deal with waste. Because when you have an underpriced asset, you will tend to waste it, whether you're an individual or whether you're a company.
Right.
There's been obviously women's empowerment. I'm talking to you here, and you are, gainfully employed, a Princeton graduate working at McKinsey. So that is an example of women's empowerment, where women's employment today is 37% of the workforce. Again, that is an incredible development in the past few years. So all these substantive things, other than just what you see in terms of announcements.
Right.
Now the giga projects, the Red Sea is moving along very well. NEOM is moving also well, although some media stories came out recently that said that NEOM has cut back dramatically, which was a misunderstanding of where NEOM was in the first place, because a project like the line was designed in modules.
Right.
In other words, it's a 170-kilometer conceptual project, but it's designed to be built in modules of 800 meters each. And so the original plan, which was decided on more than a year and a half ago, was that you start with 3 modules, which is 2.4 kilometers out of the 170 kilometers. And then you build those 3 modules first, and then you will grow module by module according to demand. So that was the plan, but somehow Bloomberg got read it upside down and said that NEOM has reduced its projected plans by 97%, which was nonsense, really.
And we see a lot of that, I think, in Western media in general.
It comes up partially because we're not good at communicating in the kingdom. In the kingdom, we don't. It's not just we don't understand how to communicate with media, but we don't give it the importance it deserves, and we don't maintain an ongoing relationship. And people are very reticent in disclosing information. The problem is that if you don't disclose information, you create a vacuum, and others will fill it with their version of the information. So it's always a problem that the kingdom has had, which is it's reticent in disclosing information and talking about things, but then it creates a space for others to talk about it. And this is just the latest example.
Right. It has been ongoing for quite some time, and I think the PIF and sports investments are also another example of that.
Yes, I mean sports come in also in the lower hanging fruit, because you already had a reasonable sports sector in the kingdom. You have tremendous consumer demand. You have a very youthful population. Football is very popular.
Yes.
So on the spectrum of risk, that's sort of a mid spectrum, and it's getting a lot of investment and will contribute, I think, meaningfully to GDP, aside from the health benefits and the entertainment benefits, and the entertainment sector also, which is a huge pent-up demand, which not only creates economic growth within the kingdom, but it retains more of the tourist spend from Saudis who were otherwise going abroad for all their entertainment.
Right.
Now, gradually, they can spend more and more of that money in-house, and that is what's happening. And you have seen the numbers. I mean, yes, you've had VAT go up, and you've had inflation, but consumer spending has continued to go up, and that partially that is due to retention of money in the country, but also women's empowerment, where more and more women are getting jobs and contributing to their families and to their own spending power. And that has led to a rise in consumer spending, on a continuous rise over the last 5-6 years.
And do you foresee that being unsustainable? So our salaries matching up to how much people are spending. It's not, Riyadh is not considered a cheap city.
It's not considered a cheap city, no, because obviously so much is happening in Riyadh. You're going to have inflationary pressures. But also certain things are mispriced. And, with so much happening, you're going to have misallocations. For example, hotel rooms are extremely expensive in Riyadh now. So, I mean, if you go at the 5-star range, they're more expensive than London. But that will change very soon, because you have this year 20,000 hotel rooms that are going to come into the market. So demand and supply, I think, as the infrastructure is built up, as more services are brought on stream, it will bring prices down to a more reasonable level. Really.
I think it goes back to the competition point of you need a lot more people in the market competing in order to be able to bring it down to a fairer price.
Absolutely.
Yeah. Interesting. And then the other critical point, of course, is to not only invest in ourselves and invest in different sectors, but also manage to bring in foreign investment. So how do you see that landscape evolving? How was it when you were in banking in the 90s versus 2000s versus
Look,
now?
The kingdom has a very, very successful history with foreign investment, going back 75 years, starting with Aramco.
Yes.
Aramco was a foreign company owned by Americans. The kingdom welcomed Aramco, had a good working relationship with it, and nationalized it gradually in a consensual manner with the owners, who got fully paid for their share. So that was it, compared to the rest of the developing world, which took on hostile nationalizations of their oil or mineral companies, and ended up in many ways damaging or destroying their hydrocarbon sectors. Look at Venezuela, even look at Mexico today, look at Iran, look at Iraq, look at Libya. So Saudi Arabia has had an excellent track record with its oil company.
And that was an incredible feat of, business diplomacy. How
It really was. It really was, because it was one of the few successes in the developing world. Then you had another success, which was banking, because the kingdom, first of all, allowed foreign banks to set up and operate here until the early 70s. Then they came up with a very creative way to, again, unlike so many other countries in the region, they did not nationalize the banks, but they said, we are going to Saudize them by asking them or forcing them all to raise capital from the Saudi private sector, so that Saudis become 60% shareholders in joint venture banks. But the foreign partner will continue to have a management contract. And what that did was it allowed the banks to retain the knowledge and the management expertise of the foreign partners, yet grow in scale dramatically. So it created 6, 7, 8 world-class banking institutions, which were far ahead of the region, really, because they retained those foreign partners. Some of them are still here, like HSBC. Others in the last 10, 15 years have left. But what they did was they just succeeded in building a Saudi banking industry, which is one of the most developed in the region. And I think that was a tremendous success. So as far as FDI is concerned, we've had a very good history in being able to attract and deal with and accommodate foreign capital. And I remember in 1990, the stock market value of Saudi American Bank was higher, on the Saudi Stock Exchange, was higher than Citibank was in New York.
Wow.
So Saudi American Bank was worth more money than Citibank in New York. Now, mind you, Citibank was about to go bankrupt, but still, it's a nice data point, you see. So now, with so much happening in Saudi Arabia, and we will require a lot of foreign direct investment, I think partially there's been a bit of confusion because laws have been changing. So much is happening. So foreign FDI has been slower than expected. But it will come in as the laws get finalized, as things settle down. Particularly, I think, as the real estate sector has opened up to foreign direct investment. Because if we look, for example, at places like the Emirates, real estate always is one of the first sectors that FDI comes into. And whether it's in shopping centers or in hotels, or we have a large tourist industry now that we're developing. And those are simple areas that you can attract FDI in and get them comfortable with the environment before they get into more complicated or complex investments. But already, from removing the agency system whereby people now don't need to have a Saudi agent, to having to allowing foreign law firms to open, to allowing foreign consulting firms to open, again, all wholly owned by their foreign subsidiaries. That all creates an environment which attracts foreign investment, because it shows that there are no hurdles for you to operate in this country independently without having to have a local partner.
Right. And not only open, but aggressively incentivizing actually to, get consulting firms, law firms, any sort of firm to sort of move into Riyadh and set up headquarters there.
Yes.
And so you have the whole Ministry of Investment working on that.
Yes. And I think, the Ministry of Investment is doing a great job. They're grappling with the complexity of having to coordinate so many other ministries and entities to all, you're like a conductor trying to run an orchestra, because that foreign direct investment deal will not take place unless everybody does what they're supposed to do.
Yeah.
So there's that challenge of choreographing everything in a successful fashion, and that takes time.
Yeah, you do. I mean, in the past couple of years, you've had 100 new entities pop up and all, doing very important and interesting work. But the alignment and the overlap between those is something that definitely will take coordination to manage.
Yes.
And so when we look at the investment coming into the kingdom, what do you see are the sectors? I know we briefly talked about real estate. Other sectors that you think there's a lot of traction in globally that would be exciting for the kingdom to be in?
Well, look, the kingdom has cheap energy. Also, it has a lot of solar capacity. It has a lot of free land. So there are, a lot of, for example, people talk about the requirements of that technology will require in terms of data storage and electricity capacity and sort of green energy capacity. That's a more creative way that FDI, I think, is already looking at setting up data centers in the kingdom that are solar powered, or even in some cases use gas that the kingdom is developing more and more and more. So that has knock-on effects in technology, because it brings up, you can start to develop an AI sector, you can start to develop other sectors that go off that, because if the global firms find out that they can harness the huge energy requirements that they need in Saudi Arabia, then it'll bring affiliated, it will start to build an ecosystem. We shouldn't get ahead of ourselves though and talk about, becoming a global center in this or that. That will take time, but we can certainly have some credible steps to start in that area. The kingdom also, has quite a good industrial sector already in place, which exports across the region. And I think that industrial sector could attract, FDI, private equity. Africa is a big export market for Saudi Arabia. The Middle East is a big export market for Saudi Arabia. Central Asia is an export market. So I think Saudi, mid-size industrial firms can benefit from bringing in FDI to scale them up,
right,
and to allow them to go up the technology curve. So that'll be another area where FDI comes in, and then obviously, in the tourism sector and the real estate sector, I think that will also be very important, and that's something that there's a big pent-up demand for among Gulf investors who want to invest in Saudi Arabia. And I think we have to focus a bit less on, say, US and European investors, and more on Gulf investors and investors in countries like the Philippines, Indonesia, Malaysia, Asia, which have an interest in Saudi Arabia,
right,
and particularly the Gulf states. There is no risk premium associated with investing in Saudi Arabia versus a European firm or an American firm. So I think we will find much more FDI coming, and we should work to attract Gulf capital. In a way, it will be easier for us to attract Gulf capital, and the Gulf is a huge source of capital, rather than it will be to attract US or European capital.
That's interesting, because I think a lot of the people that you meet at these large-scale events like FII, like WEF, a lot of Americans and Europeans who are sort of hungry to be involved in Saudi Arabia in some sort of capacity.
I worry sometimes that they're hungry to come and raise money in Saudi Arabia, not bring money to Saudi Arabia. And we have to be careful about that. And we have to be careful about our events that we do, that we focus too much on the West. We ignore our neighbors who have a huge surplus of capital. And we ignore some of the Muslim countries that have an emotional connection to Saudi Arabia and would like to invest in it. Turkey also. But Turkey and Malaysia and Indonesia are big industrial and economic powers. And they have large companies, and they have an emotional interest that would facilitate foreign direct investment. I think we need to spend more time focusing on them also.
And it is very aligned with the spirit of the vision and being a united Middle East and stabilizing the region in a sense.
Yes, I mean the region is going to be unstable for a long time, but nobody's made money shorting the Gulf in the last 50 years. So I think the kingdom will just continue to manage well in a sea of certain amount of instability around it. I think that just comes with the territory now. There's very little you can do to eliminate it. But the kingdom is a ship, is a super tanker in rocky seas, but it's holding firm and growing.
And so, just to close up, where where do you see the kingdom moving in the next 5-10 years? Because I think, it's absolutely unrecognizable from what it was 10 years ago. The next 10 years could also be similarly transformative.
Well, I mean, the next 10 years, we'll start to see how all these initiatives pan out. And you notice that the leadership and government is reviewing these on a yearly basis. So as certain things show potential, they will attract more investment and interest. As other things show less potential, they will get less resources and less attention. So in 10 years' time, we'll have a much clearer idea of which sectors have really caught on and are providing the foundation of diversification away from oil and gas. So that'll be a very interesting time to look back and see how everything has progressed, really.
Right. And I mean, for your sake, to go from the banking career in the 90s to seeing what Saudi will look like in 2030 must be quite a trip.
It will be quite a trip. It will be quite a trip, yes.
Well, thank you so much, Ali. This has been lovely.
Thank you, Yasmin. It's been a pleasure.
All right. Nice.
Great.
That was really good. That was a